Well, guys, the CPI data is out, and let me tell you, it is not looking good. It's worse than expected. The stock market is crashing, and we got to break it down. We got to break down my thoughts on the CPI report. We'll run through it very quickly, and of course, we got to break down some stocks. So sit back, relax, take a sip of your coffee, get your 10 stocks from Moomoo with a $100 deposit link down below, and your 6 stocks from Webull with any amount deposited, and let's get right into the video. So the CPI report came out 10 minutes ago, and as of now, we have the NASDAQ futures down 2.2%, the S&P and the Russell, those are down about, well, the Russell's down 1.3%, now the S&P's down almost 1.6%, as we have the Dow futures down 1.1%, VIX is up 5%, gold and silver, they're down again, gold's down 0.9%, silver's down about 0.8%, and this big drawdown has come in just the past 10 minutes. Look, SPY right before 8:30 a.m. on the East Coast was at 385. Now it's at 275, guys. SPY's down 2.6% from right before the CPI report, right? And we have triple Q down from, it was at 290 before the report. Now it's at 279. This thing is down 3.5% in just the past 10, 11, 12 minutes. I mean, this stuff is crazy. So let's just dive right into it. Let me pull it up here on Safari, guys. Give me a second and I'll make my face smaller. We'll pop myself right down there in the corner. So look at this. All right, this is the Consumer Price Index, June 2022, and the Consumer Price Index for all urban consumers increased a whopping 1.3% in June on a seasonally adjusted basis after rising 1% in May. And the U.S. Bureau of Labor Statistics reported that today, and that over the last 12 months, the all items index, guys, get this, increased 9.1% before the seasonal adjustment. And I'm pretty sure, I know for sure that's a high in terms of the inflation spike that we've seen recently. Last month, what was it? 8 point something. Now we're at 9.1%, and this has to be a 40, 50-year high. I mean, I haven't seen, we're going to get those headlines today. Oh, CPI is at a 50-year high, 40-year high. Whatever it is, it's at a multi-decade high. Let's just put it that way, guys. It is at a multi-decade high. And look at this chart here. This goes to show inflation is not cooling off quite yet. This chart shows the 1-month percent change in CPI for all urban consumers, seasonally adjusted, yada, 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 June 21 to June 2022. And you can see here, we were at 1.2% in March. We saw a bit of, more than a bit, a big dump down in April to 0.3%. May we spike back up to 1%, and now we just hit again 1.3%, taking out that May number and that March number. And again, this shows that inflation is not cooling off by the looks of it. Right now, maybe July, August, September, those CPI readings, maybe those come down a bit. Totally possible, but as of now, that is not the case. CPI, it's very hot, and we all know the government number is it's not completely accurate. Let's be honest here. The real inflation at this point is probably, I don't want to say well over 10%, like it's 20, 30% or something crazy, but I wouldn't be surprised if it's in the, well, it is 20, 30% in certain categories. I mean, way more than that, but I wouldn't be surprised if it was in, the 12, 15. What do you guys think? I don't know. Let me know your thoughts down below in the comments as always. And now let's get into the fun stuff, guys. Let's talk about these different categories and see what's going on for food, energy, all that good stuff. So what we see at the top here is the all items index, again, which came in 1.3% in June, 9.1% unadjusted in the last 12 months. And under that, we have food, which came down a little bit in June, and that's the overall category of food that's broken down, between two subcategories, food at home, food away from home, and all of these came down a bit, which is solid, I guess, month over month. Food was at 1.2 in May. It came in at 1% in June. Food at home was at 1.4% in May. It was 1% in June. Oh, actually, no. Food away from home increased. It was 0.7 in May, and it came in at 0.9 in June. And look at energy, guys. Energy had a huge pop in June. It was at 3.9% in May, 7.5% in June. That's 41% unadjusted last 12 months. We had energy commodities 10.4% in June, 4.5% in May. That came in at 60%. So obviously, most of this inflation is in energy. I mean, look at this. Fuel oil was 16.9% in May. Okay, it cooled off a little bit in June, and well, a lot of it. It came down negative 1.2% in June. But still, guys, last 12 months, we have fuel oil at 98%. That is just, I mean, come on. That is insane. This is insane stuff, guys. Energy services, 3.5% in June, 3% in May. That's 19% annualized there. We have utility gas service at 8.2% in June, 8% in May. That's 38% annualized. I mean, this is just unbelievable. And I also like looking at new vehicles, used cars and trucks, apparel, all that good stuff. So let's see here. New vehicles, 0.7 in June, 1% in May. Okay, I'm not surprised. That's coming down a little bit. That's 11.4% annualized. We have used cars and trucks, which you guys know the used car market was extremely hot 6 months ago. Recently, now it's starting to cool off. We're seeing signs of that. Used cars and vehicles or trucks, whatever, it was 1.8% in May, 1.6% in June, 7% annualized. Apparel, 0.8% in June, 0.7% May, 5%. So you guys get the deal here, right? Inflation got hotter in June, mostly due to, I'd say, energy. Energy in certain subcategories here did spike up a lot, although we did see fuel oil come down. It's, inflation's not coming down overall yet. And you guys know, we called this out. We talked about it. And it's not like it's rocket science or anything like that, but we said if inflation comes in worse than expected, which I believe, at least the estimates that I was seeing, for the annualized number, they were at 8.7, 8.8 for June. It came in worse than expected. I was saying how the markets would probably dump if that were the case. And again, this is not rocket science. I mean, and of course, not everything's predictable like this, but in this case, it ended up playing out. We have QQQ, again, down 3.5% in just the past 20 minutes. We have SPY down 2.5%. I mean, this is a volatile market that we're living in. And now the VIX is pushing 30. And what did I say for the VIX, guys? I mean, did I not say in the past couple of months, each time the VIX has come down to about 25, the mid-20s, it's gone to the low mid-30s soon thereafter? That's playing out again right now. We have the VIX from 25. Now the VIX is at 29. It's almost at 30, and who knows? This could accelerate throughout the day today, maybe for the rest of this week. So let's break down some stocks now that we covered the CPI data. Let's talk about stocks that I'm looking at. We had Delta Airlines report earnings this morning, and they didn't do that well, guys. And a lot of this, well, I don't want to say a lot of this was priced in, but if you guys saw, that wouldn't even make sense for it to be priced in. But never mind, guys. Forget I said that. But if you guys saw the move yesterday, right, what I'm trying to get at here is airlines shot up a ton yesterday. Delta was up, whatever was up, 5, 6, 7%. American, United, all these did well. So for them to go up even more today, they would have had to kill the earnings, knock them out of the park, right? But in this case, Delta, they actually missed on EPS, $1.44 versus $1.64 estimated, but they did beat on revenue, $13.82 billion versus $13.40 billion estimated. So missed EPS, beat revenue, and the stock's pretty much, by the looks of it, and this, of course, has to do with the CPI data coming out as well, dragging down the entire market, but it gave back the gains. The stock gave back the gains from yesterday. Now it's down about 8% just in the pre-market today, actually 10% from the high that it just hit, 32.40. Now it's at 29.30. It is down a good chunk. But a good thing here is for Delta, they see Q3 total revenue up let me say this again. They see total Q3 revenue, I'm mixing up my notes here, guys, up 1 to 5% from the 2019 levels, so that's good. and they see capacity down 15 to 17%. So capacity's down 15 to 17% from 2019 levels, but revenue's still going to be up. That's pretty interesting right there, guys. That's pretty interesting. So, yeah, keep your eyes on Delta. And, of course, we have these other airlines that I'm watching. We talked about them recently. American, if this breaks $15, I think we could see more upside. If UAL breaks something like a 40, we could see more upside. So, let's take a look at some other ones here quickly. Tesla's currently moving down as expected here in the pre-market. It's now under both moving averages on the 4-hour chart, but we have not quite yet broken the trend here. As you guys can see, I'm about to draw some higher lows out here for you. Look at that. We have clear higher lows still holding here on Tesla. And let's say Tesla holds about 660, 665, 70. That could be a point where maybe we get a little bit of a relief rally. Who knows? I'm not seeing, the confirmation quite yet. But in the meantime, the next couple of days, today even, we got to watch 660, right? Right around this trend. And the second this trend breaks, it's not going to look good from there. But as of now, it is not breaking. That's Tesla. We also have Enphase, which I watched, called out, and I'm watching today, called it out yesterday. This is moving down a little bit as well at about $183 right now. If this breaks under 180.75, that would be a bad point for a bad break for the bulls to the downside. But as long as Enphase is fighting around the 180s, 185, there could be some potential there on ENPH. And before we wrap the video up, guys, we got to watch SQQQ as well. This is an inverse leveraged ETF. You guys probably know it. It goes up whenever we have the NASDAQ 100 going down. So now that we have the CPI data out, volatility's up, and there could be more downside, this is one that we got to watch. We have a clear wedge here on the 4-hour chart, and if this starts taking out $59-$60, we start breaking out of this wedge, there could be a big breakout coming back to the mid-high 60s on SQQQ on more downside in the overall markets, right? And SPXS is the same thing pretty much, but it tracks the S&P 500, which tends to be less volatile, right? QQQ is more volatile, S&P less volatile. So let's say the S&P goes down 1% on the day. SPXS, since it's the bear 3X ETF, it will go up 3%, right? And if this starts moving above, let's say, $27.50, $28, there could be a breakout around the corner on SPXS. So I'm going to set my alert markers at or above $28 for that. And we're going to be watching it, guys. These markets are going to get interesting over the next couple of hours. So let me know your thoughts. As always, in the comments, hit that like button. I'm probably going to upload this video onto YouTube. Typically, I make these morning videos only for my Patreon members. So if you do want to join my Patreon, check it out. That's linked down below. You also get call outs on there, buys, sells, more access to me throughout the day, one-on-one access. And if you don't go down below, you can go to StockSurfest.com/Patreon. Don't forget to also get your 10 stocks from Moomoo with a $100 deposit at StockSurfest.com/Moomoo, or go down below and get your 6 stocks from Webull. And with that being said, cheers, guys. Good luck today. I'll see you later. Peace out.